Good day, it is your boy once again, Mr. Policy, and I'm back with another video this week. I am the founder and CEO of FX. So, guys, this week we're going to do the weekly market breakdown. It is what we do every week, standard procedure. So, guys, please, if you are new, do hit the subscribe button, like the video, and also share with your friends and family. Today we will not be analyzing uh, any indices, but we will only be focusing on currency pairs. We'll only be focusing on currency pairs and also using our institutional trading method. So it will be awesome, guys. And I'm always giving more information video by video. I'm also improving by the quality of the video, by the way I edit my videos and all. So guys, please do your most for the boy, guys. Please share this video because we need to have a lot of audience so that we may be comfortable to share more information, and I may be encouraged to also share more information with you guys. I love you all, guys. I started this YouTube channel to help you all, guys, wherever you are. I'm not here to make money out of people, but I'm actually here to help people to make money from the market, as I'm also being profitable from the market. There's a lot of money here than for me to focus on to make you money from people. So that's why I'm giving everything. I'm all about helping people. So the more people they come to the channel, the more I have more audience, is the more I become more comfortable, is the more I become more it's the more I become more encouraged to actually share my knowledge to you all, guys. So please do the most, guys, and we're about to jump into the charts, and today's video will be uploaded very early, so it will really help you so that you may wait for the right entries on the market. So let's just jump into the market. So guys, we are on the charts now, and we're looking at Euro USD day one time frame. We're starting from the higher time frame to the lowest. We can even go to weekly time frame and see what's actually happening onto the market. So guys, on Euro USD, you can see that we have a bullish market, a bit of a bullish market. uh, let's just zoom out. No, it's not that bullish. It's not that bullish. I made a mistake here, because as you can see, guys, we had a higher high, then a higher low, higher high, higher low, break of structure, higher high. This couldn't break the structure over here. Then so basically this part goes with this one. This was just a complex retracement. So what we call a complex retracement. So another higher low, then a higher high. Over here the market didn't break, so this might be just a complex retest, but we will just wait to see if actually it is one, it is the complex retest. So let's just go to our day one time frame and see. But actually, guys, if you can see over here on our day one time frame that um the market actually broke the structure over here. The market actually broke structure over here, but I don't have a clear view, and I don't see a clear view that has came back to actually give us a confirmation, or to give us a retest to come back and tell us that now the buyers have taken control. So let's just go to our H4 time frame so that we may have a clearer view of what's actually happening on the markets. Okay, guys, you can clearly see over here You can clearly see that there was a break of structure over here. There was a break of structure over here. Then the market has broke it and came back to give us an entry to buy. So after this entry, we expected obviously the market to pass this level. So because it was the new actually higher high, it was the new higher high. So we expected the market to actually break this level. Then the market actually broke that level, and by the market breaking that level, as you can see over here, it was another break of structure. The market went up and came back again here to give us a bit of an entry. By giving us an entry, we expected the market to pass this now, this break of structure, and it passed it, giving us a break of structure. Then the market actually came again to just give us another entry of a buy, and we expected the market to actually pass this level, and it passed this level, which was a break of structure. Then after the passing of this level, you can see that the market came back again over this point and actually gave us an entry. Then we had an entry. After this entry, we expected the market to pass this level. Then the market went up and passed this level, which was a break of structure. Then the market came back again and gave us an entry. Then now we expected this level to be broken, and the market broke this level actually to the upside. Then we can see again that the market has came again over here, but now the market did not come to give us an entry here. The market just came back and broke this level, giving us a break of structure and giving us a clear uh, and giving us an indication that now the bearish have taken control. We can clearly see that from this level, from this break of level, we can clearly see that the market has broke. So this is a break of structure. This is a break of structure. It's just, I don't want to make this video too long, guys, because it seems like when I make it a bit long, you don't watch it, and things that I actually speak on these videos are actually educational and things that can help you on the market, because I wanna explain why we get to certain setups. Uh, it's not good to for me to say okay, we're expecting just a buy, but by you not seeing how I have reached to a decision that we have to take a buy over there. So okay, guys, we had a break of structure. With this break of structure, it told us that now the sellers are in control, the bearish are in control, but we wanted an entry. Then the market went up to give us an entry. Then we got our entry over here. Then we sold. So when we sell from over here to here, we expect the market to pass this level, because this level is what? It's our break of structure. So we have another break of structure over here, guys. Yes, it's better to, yeah, it's over here. So we had a break of structure over here. Let's just copy this one so that we don't have a problem when wanting to use this text. So we had another break of structure over here, guys. So what are we waiting for now? What are we waiting for? Now we are waiting for the market to wherever the market decides to turn actually. But I think it will turn over here. I think it will turn over here because we have a supported area over here. We have a supported area over here with it. So now I'm expecting the market to actually drive itself up. Then, okay, guys, my laptop is a bit low. Let me put it on a charger first. So, guys, basically, this is institutional trading. This is institutional trading. Uh, I believe that it is a better way of trading because you can see what actually why have the market done what it has done actually. So I haven't not I have not drawn my movement proper, but you can see. So we're expecting the market to get back around here, or to just give us a bit of an entry. It doesn't like necessarily have to retest this area, but actually it has to actually retest, to actually, I mean, shift up and give us a better entry so that we may take our trade. So we're expecting, if the market can come here and give us an entry over here, we're expecting to take our trade over there, uh, to at least a break of structure, to at least over here, guys, coming over here. But we're not sure yet that when is the market gonna stop. But as we are following the market structure, we'll be able to know actually when to actually take our profits. So if we took our trade from here, if we took our trade from here, and our stop loss being around, yes, 30 pips, it's okay. 20 pips, I guess it's okay. Then now we would have been on a profit of 133 pips with a 1:6 risk ratio. With the right now, like actually now, we would have been on 133 pips profit. So we're expecting the markets to just get a bit here, at least 336 pips. But yet we are using a trail stop. We are using a trail stop, so we will be able to actually when to actually see when the market is about to turn. And when the market is about to turn, that's when we are going to take our profits. But what we are going to do is to just use our break-even strategy and also trail stop, putting our stop loss behind our running trades, because we took the trade here and now the trade is over here. So we're expecting to put at least our stop loss and break even. Then we are safe now. The trade is a rent free trade. Then we are just following it, and if we want to scale in, we can scale in on the trade. So we have broken many levels, guys. We have broken this level also. We have broken this level, and I'm expecting the market to break this level actually. So if the market can just a bit come down a bit to this point, at least to this point, then rush itself upwards, then that's when we're going to get our entry. Then we're going to sell, because yeah, then we're going to sell. Then the next, I think that the next point, it can be over here. Then yeah, we're just expecting the market to sell from there on. Let's just go to our H1 time frame so that we may have a clearer view. Okay guys, this is our H1 time frame. On H1, you can see from here that we had higher high, higher lows, higher high, higher lows. Yeah, higher high, higher high, higher lows, higher high. Then we have higher lows over here. Then the market was not able to give us a higher high from here, was not able to break to the upside. So this is when the sellers took place, because they broke even this level. So the more you go to a smaller time frame, the more you can get better entries, the more you can get clearer entries. Because actually, if you can see very well that we should have actually entered our trade with this entry, actually taking it to the downside, because this is when the market was broken. Then this was actually our second confirmation. So after this break, we had we knew that this was a break of structure, actually. We knew that this was a break of structure, guys. I'm very sorry for the noise. We knew that this was a break of structure. Then we expected the market to retest and give us an entry. So this was a bit messy over here, but if we can zoom in, we can find a beautiful entry over there. So we had an entry. After getting our entry, then the market went down. After the market going down, it broke this structure. Then it went up again to give us another entry. We broke this structure now. We broke this structure now, and it came back to give us another entry. Then it went down again. We broke this structure. Then it gave us another entry to go down. So guys, this is how it is actually. This is how it is. We're looking at Euro USD. we're expecting the market to tackle itself up a bit up, then give us our entry, give us our sell entry. So I'm expecting to sell now. The market of Euro USD, it's on a bearish momentum. It's on a bearish momentum, and it's confirmed that it's on a bearish momentum. So guys, let's just go to another pair. Let's just go to Cadjpy. We'll just start on our day one time frame. Okay, on our day one time frame, we can clearly see that the market was going on an upside market. Actually, it was going up. It was going up, but it's a bit hectic when it comes here, because we can see that the market is just resisting on this one level. It's just resisting and it's playing on top. So we can see that the market went up and came back again, giving us this is a high low. Then the market has not broke this level to give us a bit of another to tell us actually that this is a buy a momentum. So actually from this point, on this point, actually we haven't now the buyers haven't taken control on this point. Now the buyers haven't taken control. It's still the bearish momentum. So we're still on the bearish side. We're still on the bearish side. The market goes up again. We're still on the bearish side, and we're looking actually onto the break of this point. I'll just show you right now. We're looking for the break of this point, so that now we can know that the buyers are in control. Okay, over here we had the buyers, we had a break, but again the candle went inside to play inside. So it was just a retest. It was just a false breakout for us. Then we had a nice break over here. We had a nice break over here, and the market is coming back down. So with what I can clearly see on day one, I can see that the market wanna just come to give us an entry so that it can shoot up. But let's just go to our H4 time frame. Then if we can only take this path, only if we can take this path till here, we can clearly see, guys. If we can take this path till here, we can clearly see. Because let me do this. Let me do this. Okay, taking this part, guys, only this part, we can clearly see that the market, this was our lower low actually. Then the market went up, came back down to give us another entry actually, and it was actually breaking which level over here. We were breaking this level actually. We broke this level. Then it came back to give us an entry. It shot up again. Then it came down to this level to give us an entry because it broke the structure. Uh, then it was just tackling itself up. This was just complex retest. Then we broke this structure again over here. The market came down again to give us entries, and now this one has broke the level, and it came back to give us some entries because, guys, there's a lot of noise today. Yo, I'm very sorry for the noise. I'm very sorry for the noise. So okay, let's just zoom in and see if it was really a break. Okay, by the way, guys, we determine our break of structures with bodies and not with wicks. So we broke, but this was a bit of a bit of a force breakout. It was just a bit of a force breakout, but we would have taken the trade over here because we can see that the market has broke a bit, even though it's not clear enough. Then we had an entry to the buy side. Then the market broke this level. The market broke this level, guys. It broke this level, and now the market is tackling itself down. It wants to give us an entry so that we may shoot up. So let's just go to our 1 hour time frame. And guys, on our 1 hour time frame, we can clearly see that now, okay, so let's just adjust this up here to see something. Okay, we can clearly see that the market has broke this level, because you know the weeks, we may have weeks on day one, but when we go to smaller time frame, those weeks are actually candles. So we had a break here, we had a break of structure over here. The market is coming back to give us an entry, and this might be some beautiful thing that I'm seeing over here. Okay, it's not a beautiful structure, but we might be waiting for a bit of a, we might be having a point of interest over here, and waiting for the market to actually uh, come to our 50% level. So we might be waiting for the market to come to this level, to come to our 50% level, and us being able to take a trade from here, and our stop loss being over here, 15 pips, with a take profit of over the previous high, with about 1 is to 5 if our take profit is over here. But yet the market is still playing, the market is still going up, guys. So I might be expecting that. I might be expecting the market to come to our 50% level. If the market can retest on this 50% level, that's when I can take my trade and shoot up with it. Shoot up with it, because this is a point of interest. This is a point of interest, guys. So guys, this is the analysis of Cadjpy. We can see that the market, it's bullish now. The market is bullish now. Today, the main thing about today is I'm just showing you the power of market structure. I'm showing you the power of market structure and putting in a bit of components to it. But I'm just showing you the power of market structure, how it can determine the moves, and can tell us which trend we are in now. Because structure is very important, guys. Structure is very important. So now we are on USDJPY. We are on USDJPY. And for me, zooming out, you can see that the market was just giving us sells. Okay. Hmm. So the structure here, before I can go to other ones, I can see that from only this part, I can see that the market, yes, the market is going down. So the market over here broke structure. There's a break of structure. So guys, this is a break of structure. The market broke the structure, and the market now is going up to give us an entry. The market gave us an entry over here so that we can sell. So we expected the market to break the break of structure of this point, and it broke it. Then the market went inside. We thought it's going to give us an entry, but yet it passed this high. So this is a break of structure now. Now this is a break of structure to us. Now this is a break of structure, guys. So now with this break of structure, it clearly tells me that now the buyers have taken control. The buyers have taken control. Now the buyers are just coming back to give us an entry to be able to take our buy. So I can say this is the starting. This is the starting of our trend. And if this trade wants to go to about this level, we can beg a lot of money from it. We can literally beg a lot of money from it. So saying we take our trade from there to only this level. It's 577. 577 uh pips of profit. Then our stop loss just being around here with a 44 pip. We can even go to a mile of putting it over here. About 23 pips, but let's just put it over here. We have 1 is to 13 risk ratio. 1 is to 13 risk ratio. So this strategy allows me to be able to have such risk reward. And yet I'm still learning it. But that doesn't mean that uh, my experience doesn't put in something onto the market. So I'm able to learn more new stuff very fast, and I'm able to catch them very fast because I've been in the forex market for a long time. This year, June, it'll be my fourth year actually in the market. It'll be my fourth year in the market. So you can see, guys, that the market has broke the structure, and if we can adjust this structure, we can even put it over here. You can clearly see, guys, that the market broke the structure. So over here the market is just coming, it's just trying to give us an entry, and I can see something here very interesting. I can see something very interesting, guys. Okay, so I can see a bit of an imbalance over here. Let's just put it over here to week by week. That's imbalance. I can see an imbalance. So most of the time an imbalance doesn't work, but in situations like this I can see it working, because we can see that the market has came to this level and again came to this level and retested and just played a bit and came again to retest this level and giving us a bit of a, not a neat W, but it is a W. So we have a better confirmation, and I can say I would take my trade now from, I should have taken my trade from this level, and my stop loss being over here, 5.6 pips stop loss. Okay, then my take profit must definitely be over this level. My take profit must definitely be at, oh no, what am I doing now? But my take profit must be over this level. It must be. And I won't put a take profit yet because we are not sure. The market is still playing out, and as I've said on the day one time frame, that it's still gonna go. It's the starting of a trend. It's just the starting of a trend. So saying that now we are over on this level, guys. We are passing this one. So we are looking 1 is to 13. So this is our entry, guys. We missed it, but yet we can find other entries. So I'm sure wherever you are, you're wondering, how am I gonna get an entry? So what you're going to do is you're going to wait for this break, or either this one, because I don't think this one was just a complex retest for this one. After waiting for this one, you just wait for the market to come a bit down to retest, to give us a bit of an entry. Then you look for either a break, an OB. You look either for an order breaker, no, or an imbalance actually, no, an imbalance, or any other stuff like uh, W formation, M formation, and all. But here it's obviously W formation. Then that's when you're gonna take your trade upwards. So you're never gonna miss a trade. And when actually, if you need more guidance, you can join my Telegram group. Then that's when you're going to be able to get an update on each setup. You're going to get an update, and you're gonna get more setups actually. So over here we had a break of structure. The market, they just came. It's a small break of structure over there. So it becomes clearer and clearer from time frame to time frame. It becomes clearer and clearer. can clearly see, guys. You can clearly see that the market has broken this small, only this small break of structure. Then it came to just give us an entry, guys. It came to give us a beautiful entry, and this was the entry. Then the market goes up now. The market broke another a break of structure and trying to give us a bit of an entry over here. So we can have even another entry over here. You can see something, and oh, be a beautiful one indeed. And so now we're waiting for the market to this candle. Immediately when the market opens, I'm very sure that the market is just gonna shoot. So from every time frame, you're gonna have a clearer view, and you're gonna have many entries from that. So saying that we enter it over there with a stop loss of at least over here 2,3, 1:19. Guys, this is institutional trading, and this is called FX. This is how we trade the market. This is how we analyze the market. So, guys, I'm signing out, guys. I'm signing out. This is the analysis of EURUSD, Cadjpy, and USDJPY. It is fire, guys. Don't forget to join the Telegram group. Don't forget to follow us on Instagram. And don't forget to hit that subscribe button and like, and also leave a comment down below, because I want to hear what how the setups are treating you. I want to hear how you take them all, guys. So, guys, please do the most, guys. Please do the most. I love you all, guys. I love you all. It is your boy once again, Mr. Paul SC, and I'm signing out.